Today I will talk you through my favorite tool in the market. It's called Open Interest. I've been using it for the last 4.5 years and it never failed me. It genuinely is the best thing if you are looking for something that will give you the information about the strength or a weakness of a trend. Now, I have different use cases for it as well, but today it will be a beginner's guide on the best tool in the market. Now, first of all, we have to understand what open interest is. Open interest is the amount of unsettled derivative contracts in the market. Now, that might sound like bullshit to you or it does not matter to you, but it does. Promise me it does, because some people confuse it with volume, some people just don't use it or don't trust it. But if you watch this video in full, you'll see why it's so powerful and it's so much better of a tool than volume as well. Now, it's not volume, it's not delta, it's not a different thing. The reason it's different than a volume is because volume is the total contracts traded during a time period. Open interest is the amount of unsettled and active contracts from those contracts that were traded. Now, if you want a bit more detail about what I mean by that, you might think yourself going to a bank to sell Bitcoin. So this is you, and let's say you have a Bitcoin in your hand, and I'll actually give a different color to Bitcoin as well, because why not, like this. And this is the Bitcoin bank you're going to today. It's the most shitty place ever, as you can see. And let's say you go there and you sell your Bitcoin, and that transaction, the volume of the transaction will be 1 Bitcoin. Now, at night, you might think to yourself, well, I want to buy it again. Oh, I want Bitcoin again. I have too much FOMO. I think it's undervalued now. I want to buy Bitcoin. Well, the bank will say, okay, why not? You can buy it back, and it will give you the contract back, the Bitcoin back, and you will have another 1 Bitcoin volume of transaction from the bank. Now, at the end of the day, after you sold your Bitcoin and bought it back because you had FOMO, the volume that you caused to the market will be in total 2 Bitcoins, because you sold one and then you bought one back. But the open interest at that night, when you're sleeping with 1 Bitcoin under your pillow, will be only 1 Bitcoin. Because one of those you've already given to the market that it's not active in the market anymore. Even though there's 2 contracts, 2 transactions happening, only one of them is still active and unsettled in the market. Now, this is so important as a concept, because if we are able to understand how many people are sleeping with Bitcoin under their pillow, we can understand what market players are thinking in the market so much more better and in a way more accurate way compared to volume. Because just because you had 2 transactions does not mean that you're still keeping it. But if I'm seeing the open interest at a certain level or increasing, or if I'm seeing a certain open interest number, I might think to myself, well, okay, a lot of people have Bitcoin right now in their hands and waiting for higher or lower prices. Now, let's go back to here, and what you will see is, well, you might ask me, how do I find open interest? Now, there's different ways you can find open interest. One of them is TradingView. I think if you just go to TradingView and if you just go to this part here and write open interest, you'll be able to see this here. It's a technical thing, open interest, but I don't use it. The reason I don't use it is because I found a platform, and I've been using it for the last 4.5 years, that is a lot more accurate than TradingView, and also any other platforms like Coinalyze, or I don't know if it's on CoinMarketCap or whatever you find. Now, the most reliable one you can see is on ExoCharts. And from ExoCharts, when you go to ExoCharts, and if you have a template there, or if you don't join the tag team, I'll give you all of my templates as well. But if you don't have a template, or if you have a template here, what you will see is there will be different options that you can see or view open interest. Now, you can use the BitMEX, Bybit, OKEx, Binance, or different Binance as well. Well, from what I have seen and what I have data on as well over the last 3.5 years, Bybit BTC USD has the best open interest data out of all of them. This includes Coinalyze, TradingView, different platforms, and even inside ExoCharts. So this is the most accurate open interest in the market. Now, with the open interest, what you will see is once you have this OE here, you'll be able to view the amount of contracts that is entering or leaving the market at a certain price. Now, what you are seeing here is starting from $102,500 up to our current price at $106,600, the open interest is decreasing, which means the people in the market are actually leaving the market as the price is going up. What does that mean? Well, you'll learn in a couple of minutes. Now let's go back to our graph. Now the first thing we have to see there is open interest is much better of a tool to measure strength than volume, because it shows us the market if the market participants are actually joining the move. With volume, you only get that they had a transaction happening in the market, but with open interest, you're able to understand if they're joining the market or leaving the market. Now, here you can see a price action from 94,700 to 95,900, and you're seeing the volume go up during this move. So if you're just using volume as a tool that you rely on, you might think to yourself, well, the move is going higher and the price is going higher, so this must be a strong move. Well, if you just look at the open interest, you'll see that that's not the case. And the reason I can say this confidently is because the open interest keeps dropping as the price is going up. And why this is so important for us is because even though there is transactions happening in the market which is causing the price to go up, those transactions are not longs that are actually entering the market. The move here is caused by closing positions. Now, what could those closing positions be? First, it could be people taking profits on their longs, could be people leaving the market on their shorts or longs on market orders, or could be people getting stopped out or liquidated, forcefully leaving the market. Now, those are two different scenarios, because if you're seeing the market players enter the market and enter longs, that shows us the people have confidence in higher prices. But if you're seeing the market go higher, but the open interest drop, that's a good sign that, okay, well, even though the move is going higher, it's not backed up by people. And you can see here as well, when a move is not backed up by people, if it's hitting a big level, the chances are we will see a rejection from those levels. And that's exactly what's happening right now in price as well. Now, the important thing here is just because the open interest is going down does not mean the price has to reject or come down. But it just shows us if it's facing a big level of resistance next, the chances are if we are seeing sellers at that point, it will cause a big rejection. That's why it's really, really important to view it. So let's go back to our slide here. And the way I use open interest is first to measure the strength of a move, and also validating the CVD divergences. This is a topic that I will talk about probably either in the next video, in the future video, if you like the video, if you actually enjoy it, I'd love to make it part 2, or, depends on if you want them or not. But the first thing we have to understand is increasing open interest shows that the amount of contracts in the market is getting higher. Just as I explained in a couple of minutes ago, what that means is the market players are showing enthusiasm and strength. Because if we are going higher and the market players are increasing as well, it just shows me that the market is accepting higher levels. And when there is more people in the market, the moves will be more technical as well. So here you can see the price pushing higher from 62,700 to 63,800, $1,000 move. And with this move, the open interest is increasing as well, which shows me that the market participants have conviction in higher prices. And this is what I call strength. Now, if you just looked at the volume profile here, you would have probably analyzed this as decreasing volume, and you could have analyzed this as a weak move. Well, that's not the case, because even if the volume is going down, if you're seeing people enter the market more and more, it just shows me that people are, they're accepting higher prices, which is so much important than how many transactions are happening in the market. And the other way around, the second thing that could happen is the open interest could decrease. And if the open interest is decreasing, it just shows me that the amount of contracts in the market is getting lower, which means people are leaving the market. This could be forceful leaving, which is people getting stopped out, people getting liquidated, or people getting taking profits from their position. So it doesn't actually mean a bad thing, but it just shows less conviction and people being exhausted or disinterested in the current price action. So here is another example of the volume versus open interest example, where you're seeing the price from $65,600 push up to $68,000, a $2,500 push. And if you just look at the volume, you might think to yourself, well, the volume is increasing, so this move should be strong because there is more contracts in the market. Well, that's not the case. If you look at the open interest, you will see that the open interest in this move was decreasing, which showed me that the move was not happening because people had conviction in higher prices. It happened because people were forcefully leaving the market. This could be getting stopped out, or this could be taking profits. So that's why after this candle, we saw a major rejection to the downside, even though the volume was going up. And on this move down, again, if you just look at the volume, you might think to yourself, well, it's a steady volume kind of going up as well. It's a strong downtrend. Well, that's not the case as well. Look at the open interest. The move down from $68,000 to $65,000, a $3,000 push down, it's not happening because people are shorting the market or having conviction that it will go lower. It's happening because people are forcefully leaving the market or taking profits on their shorts. So that's why it's so crucial to understand open interest. If you're able to read open interest at a high level, it will give you such a good understanding of the trends in the market. So here you can see the price went up and down and then went back to the original price, liquidating both sides of the market. And if you wanted to be one of those people who were out of the market here and were not getting burned, well, you should have been using open interest. That's 100% for sure. And this is an example of it. This is an explanation. If you want to screenshot, you can take a screenshot of it as well. Now, this is a different subject. I will explain in a new video if you really want to. And the reason why I use it with CVD is because they are my two different tools that I use to actually enter the market as well. So if I am seeing an example like this where the open interest is increasing during a downtrend, what that will show me is, okay, the move is strong. So maybe right now, if the open interest is increasing with this downtrend, I should not be getting into long positions because the move is strong. Why would I go against the trend right now? And also, if I'm seeing the CVD, and watch that video if you haven't as well, if I'm seeing the CVD making higher highs while the price is making lower highs, that gives me a second confirmation on, okay, I should not be looking for longs right now because there's a good chance that a big player is shorting the market right now. So that's how I use it together. And for me, the perfect confluence when I'm looking for a position is I'm looking for a CVD divergence. Please, again, watch the video if you haven't. And increasing open interest while hitting a level. So this is the perfect confluence for trapped traders, and it doesn't mean that the open interest is increasing during this move. It means at the absorption level it's increasing. So let's go through some real life examples for you to understand the concept better. Let's go to the current price action right now. So as I said, right now the move up is happening with decreasing open interest, which means if we are facing against a big level of resistance next, the chances of a rejection goes higher. So this would be one of those cases where I would be interested in shorting the market if I'm seeing a big level being hit. And if we go to the chart that is let's say a weekly chart, what you will see, and why I've been telling people when we were at $74,000 not to short the market, was because during this push up, you can see here as well that the open interest was keep increasing with this push up from $70,000. So if I'm seeing more market players enter the market and actually having more strength on a move, and I'm seeing no signs of weakness, I will not be looking for shorts. And in this move here right now, on the latest move we're having over the last couple of weeks, we're seeing the open interest go sideways, which for me is not a sign of weakness because it just shows me that people are entering the market plus leaving the market, but it just shows me that if the next move comes in with decreasing open interest, that will be an amazing opportunity to short. And if you want a visual guide on what I would be looking for when I'm looking for a short, is if we are seeing, and this is our current price action, as I said, I will take a screenshot so I can show it to you better as well. And I will open up my amazing graphic here as well so I can show you my drawings. Now, if I am seeing here the price push higher like this, $230 $13,000 or $120,000, and if I'm seeing the open interest go down as well, that will be a great sign for me to say, okay, the push that is happening right now, it's not backed up by the people. So the chances of us going lower if we see a big rejection here is high. So that's the best way to use open interest in the market on the beginner level. What you're looking for, if you're looking for strength in the move, is you want the price to go higher and the open interest to go higher as well. And that is basically how I use. And one final thing I have to say before ending this video is a great understanding of open interest comes from actually understanding the fact that when a move down or up is happening, you always want the open interest to increase. So just because the price is pushing down, you're not looking for the open interest to go down as well. If you want the move down to have strength, you want the open interest to increase as well. I'm seeing on Twitter a lot of people with a lot of subscribers showing people graphs saying that this is a divergence. Let me quickly show it to you. So I'm seeing a lot of people on Twitter with, again, a lot of subscribers saying that if the price is pushing down from here and the open interest is going higher, this is a divergence. It's not a divergence. This is not a divergence. This just shows me that people are accepting lower prices. That's that's two different things. So on both cases of going higher and lower, if you're looking for strength on a move, you want the open interest to increase. So I hope that was clear for you. And that is it for me. If you want the part 2, like the video, comment on it that you want it, and I'll make it for you. Why not? And if you want more of me, if you want more of my technical analysis, I'm always on Discord. Today is one of those days where I analyze the people's trades for the week, and this is the best way to get better in the charts. And also, I post my daily updates every single day. So if you want more of these, more of me, you're always more than welcome to join the team. The link is in the description. So thank you so much for watching this video, and I will see you on the next one. Bye-bye.